Hello everyone. Today I'll be doing a January monthly analysis. Okay, I'm pretty excited. Pretty excited about this channel. Pretty excited about documenting my journey to 7 figures of asset management. So make sure to subscribe if you want to see that. Want to see me get to 7 figures of funding? Okay, I'll be documenting my whole journey. Okay, from applying to each funded challenge and showing you my trade for every single challenge, right? And yeah, I hope you learned something along with me, along this path, along this journey. And if you do want to get this template that I've got over here for the monthly analysis, then make sure to like this video. If I get 15 likes on this video, this will be either in the description or in the comments below. So without further ado, let's get straight into this. So I'll be focusing mostly on the Forex market and the pairs that I trade, okay, which are the pound, euro, and dollar CAD. So I'll be looking at the dollar CAD, dollar, Canadian dollar, pound, and euro. But I'll also do a quick overview on the stock market and the bonds and the commodities, just to get a quick, broad, bigger picture of the whole financial market. So let's get straight into this, starting off with seasonal tendencies. So the dollar has a bullish seasonal tendency in January. The Canadian dollar has a bearish seasonal tendency. Okay. Pound has a bearish one as well. And beautiful. Euro also has a bearish one. So everything aligning. The first confluence. Very nice. Second up is the quarterly shifts. So how do you do the quarterly shifts? How do you predict a quarterly shift? So you ask yourself two questions. Question number one, okay, where is the most obvious shift in structure? Okay, and which month did it occur in? Okay, and in this case, it occurred in October, right? This is the most obvious shift. Okay, if you put like 10 traders in one room, I'm pretty sure at least 6 or 7 would agree that this was the most obvious shift. So you mark out a line on the first trading day of that month, and then you project 3 months forward, and then you expect another shift around like somewhere in that month. Okay, so we're at that month right now, so that's another reason to be bullish. So far we got 2 confluences, okay, for a bullish idea. The euro as well, same thing. Canadian dollar does not have that because it had its shift later in November, so I'll just ignore that. It's fine. The pound has that. Beautiful, very clean shift, very nice. Also had a weekly breaker block. If you go to the weekly time frame, we've taken out a significant old high, right? And we have a monthly fair value gap right just laying right beneath us. So many reasons to go lower. So much liquidity beneath us. So the third thing that we look at is interest rate differentials. So I just go on to this website and I look at the central bank interest rates. Okay. And the leading interest rate is the dollar. So that is bullish for the dollar, bearish for everything else. Okay, very nice. Fourth confluence is market profile. So are we in a retracement? Are we trending? Are we in a consolidation? You know, what's going on? What profile are we in? So the dollar, beautifully in a retracement, very clean, very nice, at an OTE. The pound, same thing. Euro, same thing. Same thing. So very nice. All 4 confluences aligning, right? Fifth one is where it gets a bit more interesting. Intermarket analysis is where I look at the stocks, the bonds, and commodities. Starting off with the stock market. The stock market has a bearish seasonal tendency in January. Okay, so if you try to see this idea on the chart, it kind of makes sense because we've taken a old high. We're at a premium, as premium as it can get. Okay, so and we're well off overly extended. So I think it would make sense to expect at least a retracement, right, into maybe this mitigation block. S&P, same thing. And NASDAQ, same thing. Next up is the bonds. Okay, so we're looking at the 30-year, the 10-year, 5-year, and the dollar to see if we've got any SMT. Okay, 1 and 2, we look at market profiles, structure, PD arrays. So we're at a mitigation block on the 30-year. Nice reaction off of that. Another mitigation block on the 10-year, and the 5-year just missed a breaker block. So it's not a big issue. Okay, I mean, we can still do that and show SMT and create some SMT. I mean, that's thinking a bit too far ahead, you know. But overall, everything is still aligning, okay, with the PD raise. And the dollar is at a weekly fair value gap, as you can see here. A very nice reaction off of that. We also have a fair value gap here and some equal highs. Commodities. We look at crude oil. Crude oil has a sideways consolidation seasonal tendency in January. Not very clear, okay, but not very one-sided, but I'd say bearish. Okay. Gold has a bullish seasonal tendency in January. It's not very clear as well, right? Not like August, or not even August is a bit choppy. Not like September. September is just obviously bullish, right? But January is a bit two-sided. Yeah. To keep going. So crude oil. Let's look at COT. Crude oil is in a buy program on the 12-month, 2-year, and 3-year. Okay, so that's a reason to be bullish on crude oil. Okay. Looking at structure. We do have a retracement into this order block. Okay, and a fair value gap aligning with that very beautifully. Okay, so I think our next draw would be this high and into this monthly fair value gap. And then maybe after that, we'd go for these equal lows. On gold, I mean, gold is at an extreme in COT, and it's in a sell program all the way through, right? And we've just hit an all-time high on gold. So, and we're also at a quarterly shift. So I don't think expecting a bullish gold from here is very realistic. So far, everything is aligning. Okay. Intermarket analysis, all aligning. So let's sum this up and look at market structure and PD arrays real quick. Starting off with the dollar. Okay, dollar has COT at a all-time high in the last 2 years, 12 months, and 3 years. So it's pretty fucking bullish if you ask me. We have hit a weekly PD array in a OTE, okay, discount. We have equal highs aligning with the liquidity void. I think this is the first target. Second target might be this monthly fair value gap. We're also at a quarterly shift. Let's not forget that. So that's another reason. And let's look at this is euro, no, pound. Let's look at the pound. Very nice OTE into equal highs, and I think the next target would be this monthly fair value gap. It's very obvious, and we're coming off a weekly breaker block, so that's pretty significant. Very clean one as well. So let's look at the euro. COT, by the way, I didn't cover COT, forgot about that. COT is not yet decided. It's right at the 0 line, but on the 2-year and 3-year, so the bigger programs, it is so. Euro. The euro is, the COT is still same thing. It's a bit more bullish as well, right? But we're at a rejection block, okay, above an old high as well. And next target will be this fair value gap and this low, which is also a monthly fair value gap. Canadian dollar or dollar CAD. COT very bullish. Okay. And this auto block is very high probability because we took out a low. That makes it very high probability, very liquidated. So the next move higher would be this fair value gap. Okay. And maybe these equal previous week highs. So to sum up, everything was bullish for the dollar. Okay, I think there's a high probability bias for this month. And if you want to see more of this, make sure to subscribe. If you want to see a tutorial on market structure or daily bias, that might be the next video. And yeah, that's it. Make sure to subscribe if you want to see me on this journey to 7 figures of assets under management. And make sure to like this video. 10 likes or 15. Did I say 10 or 15? Let's make it 15. 15 likes, and this template will be down in the description. Thanks for watching, or in the comments. Thanks for watching, and I'll see you in the next video.